This is your Mortgage Rate Watch for Thursday, December the 16th, and I'm Keith Akada with the Mortgage Reel. So here's a great way to look at what's going on with interest rates because we're definitely getting a lot of feedback right now asking how high can interest rates go. So let's take a look at what's causing interest rates to really move up. For a lot of you out there looking at retirement, 401ks, or just thinking of that type of model, for instance, in a 401k, there's an option to invest into stocks. There's an option to invest into bonds. If you don't even pay attention, what's happening is a lot of your 401k is invested in mutual funds. Mutual funds, for instance, invest in bonds. Well, here's case in point. In a grand scheme of things, if you work for a company of 100 people, and if all those 100 people have 401ks and they all had mutual funds, they're invested in bonds, and right now bonds are underperforming, so you're looking at where can I put my funds in my 401k to make more money. You're going to switch from bonds to stocks. And unfortunately, on the independent level and on the greater scheme for investors and hedge fund managers out there, they're looking to maximize their returns on investment. So they're looking at going into the stock market. Well, when the funds leave the bond market, move into the stock market, unfortunately, that does put pressure on bonds to spike up to try to attract some of those funds back. Now, when the yield moves up, that's where mortgage rates are also moving up. So that's the pattern that we're seeing. And here's a fact. It took 6 months for us to get to the lows of where we're at, almost going below 4% on a 30-year fixed. It took less than 6 weeks for it now to go to 5%. So that is the concern that we've had the standpoint with here at the Mortgage Reel to put out there. Now, the biggest thing going into the new year is what could potentially happen. There's a lot of news that's still coming. The employment reports came out, and they're showing that they are starting to slowly have jobless claims fall, but that still doesn't help the unemployment number. And also, the biggest thing right now is we're looking at what's going to happen with QE2. As long as the pressure keeps to continue to be put on bonds, then we're going to see interest rates spike. Now, there is what's called a bounce off the bottom, and should this bounce happen, we're probably going to see it in the new year because right now it's sell on the news, and then it's going to be buy on the facts. So there's going to be a lot of economic data coming out after Christmas that could help the bond world. But for now, definitely going forward, looking at a locking standpoint. To get even more information and education that we're getting ready to put out, make sure to join us and like us on our Facebook fan page because for those who like us, we do have exclusive offers available. Any other breaking news, we'll also post on our Twitter page. Otherwise, we'll be back tomorrow with more. Thanks.